joining us with the buzzers. Another soft day that's coming in. But let me get on board. Rohit Srivastava is the founder of Strike Money Analytics and Indiacharts, who's joining us on the technicals. Hi, good afternoon, Rohit. Thank you so much for joining us. Rohit, the market texture looks rather weak. In fact, on the back of heightened geopolitical tensions and the overhang of the tariffs, which hasn't really come to a conclusion, the markets are not doing that well. In fact, on the Nifty, we have given up those, record highs that we have hit. In fact, we are below the 26,150 level. Nifty Bank has also given up the 60,000 levels. Now, what are the next levels to watch out for?
So I don't think, while it may appear purely looking at the Nifty that it's, a very weak market, but on the side, very slowly we are seeing stocks move higher. It's unfortunate that, we see this kind of Nifty behavior from the bottom that we saw in early December. Every time there's a 2-3 day rally, it's sort of given back a lot of the gains over the next 4 to 5 days. The good news is that we've made a higher bottom each time. So from early December to the 18th of December, we made a higher bottom. Then on 30th of December, we made a higher bottom. And hopefully this time around, we will do something similar. So I sense we'll have support. It should be anywhere around this level. But if it does dip, the final support is closer to the 20-day average. And that level is around 26,009. So that's, 26,037. So that's pretty close out there, but it's not necessary we dip there. And I do think we will again attempt to move higher towards the trend line of all the highs that we've made. That level on the upside is at around 26,540. Now that will be the big breakout point where, the up move probably accelerates. But yes, getting there seems to have become a challenge because we are moving very, very slowly and a lot of rotation happening. So, last month you would have thought Reliance is the best performer in the market, and now that it's selling off, that weighting has shifted to other parts of the market, whether it's in the metal space or whether it's in the banking space. So that rotation is keeping indices, away from having a runaway move. But again, I repeat, this is a slowly upward building market, and we are seeing that trend develop, across the board, one at a time.
Interestingly, Rohit, you spoke about the sectoral churn that's underway. Talk to us about the sector that you would be now bullish on going forward, and also if there are any counters that you're bullish on. If you could give us your picks.
Yeah, so I think banking comes out very, very clearly because Bank Nifty, I think last 3 days actually is consolidating, falling much less than the Nifty because it's still far away from the 20-day average that I spoke about. So it's sort of building a base close to 59,800. And broadly, I would say interest rate sensitives, which includes banking, metals, both of them to actually continue to do well, maybe even the autos, so you have banking, metals, autos. I do see a pickup in realty stocks. So we did recommend, to our clients DLF yesterday as a potential, mover as it joins that move. But so that is the difference between something just starting, while in banking, we're already seeing performance in a lot of the second line private banks, instead of the big ones, which is Kotak and HDFC, we're probably avoiding those and finding momentum in the second line, meaning stocks like RBL, IDFC First, IndusInd Bank. IndusInd is, of course, an index name, so it's one of the bigger ones. But that is where we actually seeing positive momentum versus, the large cap banks, which we already very well know about.
All right. Clearly, banks and financials are a clear consensus call. Rohit, on that note, we'll let you go and thank you so much for joining us. Well, with that, it's time for a quick breather. Don't go anywhere after the break. We'll keep getting you more updates on the market. Stay tuned.